Hi everyone, welcome to the webinar and workshop series conducted by TCS in lieu of the upcoming SCS exams happening in November 2024. My name is Nick and I'm the lead tutor and evaluator for SCS at TCS. So let's look at the session plan. First things first, I'm going to take you through your F3 syllabus, thereby highlighting which elements will be tested at your exam. Because when conducting your preparations, it's of utmost importance that you understand which syllabus elements will be tested at your real examination. And once I'm done with it, I will move on to the discussion of one of the mock exams which we have developed for you concerning your F3 syllabus. And then I will also proceed to a Q&A session. So as per our study plan, be it your 8-week study plan or your 3-week study plan, you should be done with some mock exams by now. So, definitely you'd have questions. So I'm ready to address all your questions and concerns during the Q&A session. All right, so before we get into the nitty-gritties, let me quickly remind you of the upcoming workshops which we have scheduled for you. We are conducting a workshop which is focused on your P3 syllabus, which is happening next Sunday at the same time. And at this workshop, I will also open up for a Q&A so that you'd gain an understanding of, or you'd gain the opportunity of getting your questions answered during the Q&A session. And the final workshop, which happens 2 or 3 days before your real examination, I will be sharing last minute tips with you to make sure that you walk into your exam with a positive mindset. So as you have done throughout the previous 4 to 5 weeks, join us on a weekly basis via these workshops with the intention of ensuring that you have the ability of keeping track of your performance on a weekly basis. And on top of that, if you have any questions or concerns, you can get them addressed by attending each of these workshops which we have scheduled for you. And let me quickly remind you of what you are supposed to do as per our 3-week study plan. So if you are yet to start your preparations, you still have time. If you are ready to commit yourself and attempt all 6 mock exams and conduct your preparations or revision focused on redeveloping answer plans. So all these things we have highlighted since the 3rd webinar. Throughout on a weekly basis, we have highlighted what you need to do. So when conducting your preparations, your objective should be to attempt a mock exam. Once you have attempted a mock exam, watch the master classes to learn theory and improve application. And once you have learned your theory, test your knowledge by redeveloping answer plans, because just because you attempt 6 mocks, you won't pass your examination. You need to spend some time to revise your knowledge. And the best way to revise your knowledge is to focus your attention towards redeveloping answer plans, because if you have the capability of structuring your answers in an accurate manner at your examination, then you will act when conducting your preparations. If you have the capability of or improve your techniques when it comes to answering or developing answer plans, then you can replicate the same methodology at your real examination. If so, you'd end up passing your exam comfortably. So I hope you'd start preparations. If you're yet to start preparations, at least now you need to start preparations, especially if you are planning on sitting for the exams happening in November. All right, so let me first things first take you through your F3 syllabus, thereby highlighting which type of syllabus elements can be tested at the exam. So I'm going to take you through the document which we have developed for you. We have already shared this via the WhatsApp group, where I've highlighted syllabus elements which you have to be conversant when conducting your preparations. So looking at the E3 syllabus, as you know, is divided into 3 main elements. The first part is about strategy, evaluation, and formulation, and focused on these 3 elements. Different types of syllabus areas can be tested at your exam. And on top of that, board responsibilities is another serious element which is tested at your exam, again covered within your E3 syllabus. And this is tied to corporate governance as well, because when managing a board, the board members are supposed to adhere to local regulations, as well as they need to adhere to corporate governance best practices. So board responsibilities will be tested, and corporate governance and ethics, because as I mentioned earlier, you need to fall in line when running the board or running the affairs of Rotomyne. You need to make sure that the board members fall in line with corporate governance guidance. And on top of that, you need to be conversant about how to conduct your affairs in an ethical manner, because if Rotomyne is conducting something or conducting its affairs in an unethical manner, then it will lead to reputational risk in the future. So in order to avoid these type of inefficiencies or issues, it's best that you understand how a company should conduct its affairs in an ethical manner. So all these things will be tested, and when developing our mock exams, we have made sure to cover each of these elements highlighted within this document. And looking at your F3 syllabus, so in today's session, I'm going to take you through a question concerning your F3 knowledge. So when looking at the F3 syllabus, your knowledge pertaining to financing options concerning debt versus equity will be tested. So in today's session, I'm going to take you through a question which tests your understanding about financing options. So when thinking about financing options, as you know, any company has two options at its disposal. One is to opt for debt, or the other is to opt for equity. So when thinking about financing options, you should not only focus your attention towards long-term funding options. You need to be conversant about how to raise finances in the short term. So hence, you need to be conversant with short-term funding options as well. So in today's question, which I'm going to discuss, I'm going to cover both these elements, long-term funding options as well as short-term funding options. Then when opting for a loan, you might have to demonstrate creditworthiness to lenders, especially if you're opting for an international loan. If, let's assume, you are trying to set up a mine within a different country, and when you're trying to do so, you might have to go for debt financing, because you need to fund the setting up of the new mine. When doing so, you'd have to deal with an international bank which is located within another country, because when it comes to dealing banks which are located within Poland, they'll already know what type of a company we are. So because of that, we need not do too much to convince them. However, if we're operating in a foreign country, we might have to deal with their local banks when opting for debt financing. So when doing so, you need to understand what Rotomyne should focus on when it comes to demonstrating creditworthiness to these international lenders. And on top of that, you need to know how to handle a rights issue. So again, in today's session, I'm going to take you through this part where I'll, when explaining funding options, long-term funding options, I will explain what a rights issue is and what we need to get right when opting for a rights issue. Then you have to also be conversant about debt covenants, because if you opt for loans or debt financing, any company should make sure that we fall in line, or we fall within our existing debt covenants. So these debt covenants are the type of contracts or agreements which we have signed with our existing creditors to make sure that our financial standing is not adversely impacted due to us opting for additional loans in the future. So when opting for additional loans or when opting for additional debt financing, we have to make sure that we remain within debt covenants which we have signed with creditors. If not, we might be exposed to different types of risks in the future. So all these things, you have to be conversant about all these things, how to deal with debt covenants. Then your knowledge pertaining to company valuation will be tested at your examination. So there could be a scenario where we try to acquire a smaller company, or there could be a situation where we are trying to merge with an existing player within the industry. So when doing so, you need to gain an understanding about how to value each type of company. So your knowledge pertinent to valuing smaller companies or quoted companies, all these elements will be tested at your exam. And how should we handle an additional dividend payment? Because whenever our cash flows or profitability increases, then the shareholders will expect us to pay a higher dividend. So, if within a certain exam scenario, it's highlighted that our board has decided to go for additional dividend payments in the future, you need to know how we should tackle such a situation, what we need to get right when opting for an additional dividend. And on top of that, your knowledge pertinent to integrated reporting concerning six capitals will be tested. As you know, as companies in this day and age, we are not only supposed to develop our financial statements. Along with our financial statements, we need to keep our stakeholders informed about our non-financial performance. And the best way to do it in a structured manner is to focus on six different capitals, thereby explaining to stakeholders about how we have managed our financial and non-financial performance in an effective manner. So your knowledge pertinent to integrated reporting, or to be precise, six capitals will be tested at your exam. And how to manage risks and how it impacts our share price. So risk management has everything to do with your P3 syllabus, but this element is relevant to your F3 syllabus. So you need to consider what's highlighted within each scenario, thereby identifying what type of a risk we are exposed to. And based on this risk exposure, you need to have the capability of understanding how it will impact our share prices, both in the short term as well as the long run. And on top of that, if we are pursuing a certain strategic option, again, due to us pursuing a certain strategic option, how it will impact our share prices in the short term and the long term, all these things are covered within your F3 syllabus. So I've covered all these elements when developing the 6 mock exams to make sure that you are not testing your luck at your real examination. Instead, when you are walking into your real exam, you are totally conversant about how each element highlighted within, how each syllabus area highlighted within your F3 syllabus is tested at your real examination. And simply talking about your P3 syllabus, it has everything to do with risks and the internal control environment of your chosen company. So you need to have the capability to identify risk and come up with mitigatory action. Then your knowledge pertinent to how to update the risk register will be tested at the exam, because as a senior finance manager, your role is not just to identify risks and come up with mitigatory action. You need to know how or what you need to do when it comes to updating the risk register and how to do it. And you have to be conversant about internal audit responsibilities, because as I mentioned earlier, under your P3 syllabus, risks and internal controls are tested. So internal controls, or setting the internal control environment and ensuring that all employees stick to these internal controls, is the responsibility of the internal audit department. So internal audit responsibilities will be tested at your exam. And on top of that, your knowledge pertinent to internal controls, which will help the company overcome issues it faces at the moment, will definitely be tested at the exam. So I will explain all these P3 related elements in depth in next week's workshop, because I'm going to direct your attention towards your P3 syllabus primarily at next week's workshop. All right. So having said that, let's look at what we offer at TCS. Once I've explained what we offer, I will move on to the discussion of the mock exam concerning your F3 syllabus. So I'm on the SCS page. If you're yet to check the free content, click on this button and create a free user account. Via the free user account, you'd gain access to different types of free resources. So in order to access it, you need to go to the SCS page, click on this button and create a free user account. Once you have done so, you'd gain access to our dashboard. Click on My Courses. In front of SCS Free, you'd see a button which reads as Access Content. Click on it. And once you have clicked on it, you'd gain access to the recorded versions of the webinars and workshops which we conduct on a weekly basis. You'd gain access to the answer plan of the free mock exam. and you'd gain access to the free mock, its questions and the answers. And on top of that, you'd have the ability to attempt the free mock exam under exam conditions via our exam platform. We have developed an exam platform which is akin to the Pearson VUE system. So this is the best way to uh, practice your answering and time management techniques, and at the same time be exposed to exam stress, because if you are exposed to exam stress when conducting your preparations, you'd know what to do to overcome these stressful situations at your real examination. Because in webinar number 3, we have taught you answering and time management techniques, and in webinar number 4, we have taught you stress management techniques. So put these techniques into practice when practicing the free mock exam. And if you opt for paid content, you'd gain access to, under the premium pack, you'd gain access to all 6 mock exams via our exam platform. So that's these are the type of resources you'd gain access to under the free content. And if you are interested in investing on our paid content, click on this button and check out the sample material which we have included to gain an understanding about the type of resources you'd gain access to via TCS. And if you are yet to join our SCS WhatsApp discussion forum, click on this button and join it. Via this forum, you can engage in group learning. And on top of that, we will be sharing hordes of free resources with you. And whenever you have a question, you can always get in touch with us via the WhatsApp group. I'm always there to help you guys out. And talking about what we offer 2 main packages, the value pack and the premium pack. The value pack is designed for those who have completed their CIMA OTQ exam. So if you have completed your F3, P3 and E3 OTQs, you have already learned theory. You simply need to improve your application skills. To make sure that you improve your application skills, we have come up with a set of resources which are available under the value pack. The value pack comes with recordings of all webinars and workshops which we conduct on a weekly basis. You will also gain access to 6 mock exams with suggested answers. So on top of mock number 1, which is provided free of charge, you will also gain access to the additional 5 mock exams. And when developing these 6 mocks, we have made sure to cover the entire syllabus so that you are not testing your luck at your real examination, so that you are conversant with how each syllabus element is tested at your exam. And as I showed to you a while back, based on the document which we have already shared with you, we have developed all these mock exams. And you'd also gain access to pre-scene analysis videos. Once you have watched these 3 pre-scene analysis videos, you'd gain an in-depth understanding of what appears within your pre-scene document. You need not conduct your own research to understand what appears within your pre-scene. Then you'd also gain access to the annotated pre-scene, industry analysis and financial analysis slides. Let me quickly show you what I'm talking about. So this is an annotated pre-scene which we developed for a previous case study examination. As you can see, as part of our annotations, we have come up with a good summary of the entire pre-scene. And at the same time, we have indicated probable exam scenarios which can be tested. And we have also indicated probable syllabus elements which can be tested based on the information presented, based on the hints highlighted within the pre-scene document. So once you gain access to the annotated pre-scene, you will gain a good understanding of what type of information appears within your pre-scene document. And at the same time, you will gain an understanding of what type of scenarios will be thrown at you at your real examination, and what type of syllabus elements can be tested based on the hints provided by the CIMA examiner. And talking about the industry analysis slides, this is divided into 4 main elements. In the first part, we have provided an overview into your chosen industry to make sure that you gain a good understanding of how real-life companies operate and what they go through within your chosen industry. Then we have also highlighted the competitive landscape and industry trends which is relevant to your chosen industry. By gaining an understanding about the competitive landscape and industry trends, you stand a chance to understand what type of scenarios can be thrown at you at your real examination. And at the very end, considering 2 real-life companies, we have provided examples to make sure that you gain an understanding of how real-life companies operate within your chosen industry. And towards the end of your pre-seen document, you would have seen the financial statements of Rotomyne and its closest competitor, Litzdig. So concerning each financial statement, we have developed this set of financial analysis slides. So we have evaluated each financial statement in depth, yet making sure to keep things simple so that you can easily understand what appears within each financial statement. And then we have also conducted a ratio analysis, thereby evaluating each ratio. Yet, we have evaluated each ratio in depth. However, we have made sure to keep things simple so that you can easily understand about the financial standing of your chosen company and its closest competitor. So these are the type of resources you'd gain access to under the value pack. You'd also gain access to top 20 likely issue slides, which indicate the most probable syllabus elements which can be tested at your exam. You'd gain access to a case study familiarization kit. Once you have read through this familiarization kit, within 10 to 15 minutes, you can gain an in-depth understanding of the technicalities behind your SCS exam. You'd gain access to a tutor-managed live chat and OTQ revision cards. So as I mentioned earlier, the value pack is designed for those who had already completed their OTQs. So after you have attempted your mock exams, let's assume you did not do a good job when attempting one of the subtasks, or you struggled with a certain theoretical concept. Your job should be to simply refer to our revision cards to brush up your knowledge concerning a theoretical element which you have forgotten, rather than wasting time by going through your past study notes, your study texts and whatnot. So in a jiffy, by referring to our OTQ revision cards, in a jiffy, you are in a position to brush up your knowledge concerning different syllabus elements. So the value pack is priced at £299. And looking at the premium package, this is designed for students, those who are coming through the exemption route and those who had failed the SCS exam previously. Both students have the same problem. There are gaps in theory knowledge as well as issues with application. So it's the intention of teaching you theory and making sure that you improve your application skills. We have developed a set of additional resources on top of what appears within the value pack, and all these additional resources appear under the premium package. So if you opt for the premium package, on top of what you'd gain access to under the value pack, you'd gain access to the online mock exam platform on which you can attempt all 6 mock exams under exam conditions. And as I mentioned earlier, we have developed a mock exam platform which is akin to the Pearson VUE system. So when practicing your mocks, you are practicing each mock exam under real exam conditions, which is going to be extremely beneficial for you at your real exam. And you'd also gain access to one-on-one tutor feedback on the last 3 mock exams, mocks 4, 5, and 6. And let me show you the type of feedback you'd receive under if you opt for the premium pack via TCS. So you can see the type of feedback which we offer. Each and every paragraph and each and every answer point has been evaluated in depth to make sure that you understand your shortcomings, because the objective of opting for tutor feedback is to make sure that you gain a good understanding of your shortcomings, because if you understand your shortcomings, when conducting your revision, when redeveloping answer plans, you can take steps towards overcoming your shortcomings. So you can see the type of feedback you'd receive if you opt for the premium package. And at the very end, we have provided mark allocations on a subtask by subtask basis. And we have also indicated a success rate, which indicates the subtasks in which this student has not done a good job. So after receiving tutor feedback, with the intention of overcoming your issues, you need to redevelop answer plans focused on the subtasks which are highlighted in yellow. So by doing so, you are solely focusing on overcoming your shortcomings rather than wasting time to redevelop answer plans focused on the entire mock exam. You are simply focusing your attention towards overcoming your shortcomings when you are redeveloping answer plans focused on the subtasks which are highlighted in yellow. And at the very end, we provide general comments as well. All right, so that's the type of feedback you'd receive under the premium pack. You'd also gain access to answer plans of all 6 mock exams. So on top of the mock exams and the suggested answers, we are also providing answer plans or sharing answer plans with you, focused on all 6 mock exams. And once you gain access to these answer plans, your life becomes easy when it comes to understanding how to structure your answers, because at the SCS exam, marks are allocated based on the quality of the way in which you structure your answers, quality of the content of your answer. So the best way to understand the content and the structure needed when developing your answers, you need to gain access to these answer plans. So once you gain access to these answer plans, you'd know how to structure your answers. You'd know how relevant theoretical elements should be brought in when developing your answers. Then you'd also know how to consider the information presented in your scenario and how to consider preceding information when developing your answers. You'd also gain access to 15 master classes in a little while. You'd understand how we conduct our master classes and what type of elements are covered within our master classes. In a nutshell, we have developed master classes focused on each of our mock exams, with the intention of taking you through the logic behind each answer, and at the same time teaching you the relevant theoretical concept covered within each mock exam, and to make sure that you understand application skills. So as I mentioned earlier, most students who had failed or those who are coming through exemption routes, they have gaps in theory knowledge and application. And by watching these master classes, you can easily improve your theoretical knowledge and get rid of your issues pertaining to application. And once you have gained access to all these different types of resources, you will pass for sure, hence the pass guarantee. So if you invest on the premium pack and end up failing, you will gain access to the premium content in your subsequent sitting free of charge. However, in order to claim the pass guarantee, you have to complete these 3 requirements. You have to complete all 6 mock exams. If not, we cannot guarantee your pass, because you have to be conversant with how each syllabus element is tested at the exam. And in order to cover all syllabus elements, it takes 6 mock exams. You cannot expect to cover the entire syllabus by attempting just 2 or 3 mock exams. And when attempting each mock exam, you need to do it on your own. You should not refer to any of the suggested answers, the answer plans, or the master classes, because the intention or the objective of achieving each mock exam under exam conditions is to be exposed to exam stress, is to understand your shortcomings, and is to have the opportunity to develop or master your answering and time management techniques. So when attempting each mock exam, as I mentioned earlier, one of the prime concerns is to understand your shortcomings. If you go through the answers, you will never understand your shortcomings. And if you don't understand your shortcomings, when conducting your revision, you cannot take steps towards overcoming these shortcomings. And you have to meet the performance criteria of 40% or higher, focused on the last 3 mock exams. We have come up with this performance criteria to make sure that you do a serious job in your last 3 mock exams, especially given the fact that you are receiving tutor feedback for them. So once you have completed these 3 requirements, you will pass for sure. That's why the premium pack comes with a pass guarantee. So the premium pack is priced at £899, which can be paid in 2 installments of £449 each, to be paid across 2 months. On the other hand, if you opt to pay in full, you stand a chance to save £100. If so, the price is just £799. So you can click on either of these buttons and invest on your preferred package. And all products are available until the 28th of February 2025. So if you're planning on sitting for SCS exams in Feb, you can start preparations now itself, which will give you ample time to attempt all 6 mocks, watch all master classes, and significantly improve your answering technique by redeveloping answer plans. And taking you through our SCS study plan, let's try to figure out what you are expected to achieve within this week. So this study plan is applicable to those who had already adhered to our 8-week study plan. So as per our study plan, we are in week number 6. So within this week, you are expected to allocate 9 hours of study time. So you are supposed to attempt mock number 4. Actually, this should be mock number 5, because mock number 1 was considered as the free mock exam. But if we consider it to be mock number 1, then you are supposed to attempt mock number 5, within this week via our exam platform. Once you have attempted the mock, you need to learn theory and application. With that in mind, you are supposed to watch the 3 master classes. Once you have watched the 3 master classes, after learning theory and understanding how to work on your application skills, test your knowledge by redeveloping answer plans. If you skip this process, there's absolutely no point of attempting mock exams, because after attempting mocks, learn theory and application by watching the master classes. Then you need to take another step to understand whether you have learned something. You need to test your knowledge. The best way to do so is by redeveloping answer plans focused on your weekly mock exam. And once you had redeveloped answer plans, refer to personalized tutor feedback you'd receive for mock number 5 to understand how to further improve your chances of passing the examination. And if you're adhering to our 3-week study plan, we have already shared the 3-week study plan with you. So, you are supposed to, do what is mentioned within the 3-week study plan. All right. So having said that, let's move on to the discussion of our mock exam. So I'm going to take you through the last section, which appears within our first mock exam. If you had already attempted our free mock exam via the exam platform, you know what I'm talking about. So there was a question about funding options, which tests your understanding about long-term as well as short-term funding options, which appears within section 3 of our free mock exam. So the time allocation is 60 minutes. A month later, you receive the following email from Martin Jacobs, the CFO. I have attached a scanned copy of a quotation that was circulated to the board. So let's look at what appears within this quotation. So it gives us an indication of about 2 different types of costs. There's an initial escrow setup and integration cost, which comes up to 300 million C dollars. And there's an annual escrow management fee, which comes up to 200 million C dollars. So the total value which appears within this quotation is 500 million C dollars. As you know, we are utilizing P dollars within Poland, but this quotation is in C dollar terms. So what are the information which is tied to the initial escrow setup and integration as well as annual escrow management fee? Initial escrow setup and integration, we propose to establish a customized escrow arrangement for Rotomyne's eco-extraction technology. So this question is totally aligned with the information which appeared within your sections 1 and 2. In section number 2, there was a question, there was a scenario rather about an escrow arrangement. So let me quickly take you to section number 2 and explain what this escrow arrangement is about. The board is trying to protect Rotomyne's market lead and innovation, because as per what appeared within section number 1, in the scenario of section number 1, we have found something new, something known as the eco-extraction method, which is a better extraction method, which will significantly improve our competitive edge. So with the intention of protecting Rotomyne's market lead and innovation, the company is considering establishing patent protection via a third-party escrow and technology licensing agreements to securely manage the proprietary elements of the eco-extraction technology. Because as per what appears within this section, section number 2, we are contemplating about a situation where we are trying to share our proprietary information under a licensing agreement with our competitors. So when sharing proprietary technology, we have to make sure that we safeguard our proprietary knowledge or we safeguard our patents. We can make money by sharing our innovative technology with other players within the market. That's quite all right. But when doing so, we have to safeguard our proprietary knowledge. So with the intention of safeguarding our proprietary knowledge, we can go for an escrow arrangement. That is a situation where a third party handles our intellectual property. A third party takes steps to manage our proprietary information, making sure whenever we are sharing our information with a third party, whenever we are giving access to our proprietary technology or knowledge to a third party, we safeguard our proprietary technology or intellectual property. So with that in mind, we are trying to deal with a specialist third party, which is providing escrow related services. And in addition, stringent non-disclosure agreements will be implemented to safeguard intellectual property. So section number 3 is about how much these escrow services are going to cost us. So this is what is highlighted within our reference material, which gives us an indication about one of the companies out there, we escrow, how much it is going to charge us for this initial escrow setup integration as well as annual escrow management fees. So we propose to establish a customized escrow arrangement for Rotomyne's eco extraction technology. This includes the secure storage of key proprietary elements and documentation in escrow, ensuring that they are available to licensees only under clearly defined conditions that protect Rotomyne's intellectual property. The escrow service will safeguard the proprietary process and core components of the eco extraction technology while seamlessly integrating our secure protocols with Rotomyne's intellectual property protection framework. So in order to achieve these type of safeguards, these guys are charging 300 million dollars. And what about the annual escrow management fee? To maintain the integrity of the escrow arrangement, we will provide ongoing management services. These include periodic reviews of the protected technologies documentation and integrity, ensuring that updates or modifications to the eco extraction process are securely incorporated. We will also provide administrative support for the controlled release of any components to licensed third parties as per Rotomyne's instructions, ensuring full compliance with license agreements. So in order to do these things, in order to make sure that this escrow service runs without hiccups across a number of years, these guys are charging an escrow management fee of say $200 million on an annual basis. All right, so this is the information which appears within the quotation which we escrow, an escrow services provider, has shared with our board. We escrow has an excellent reputation for the provision of escrow services. The company is based in Zealand, whose currency is the C dollar. That's why this quotation is in C dollar terms. We escrow insists on being paid in its home currency because it is stronger than the P dollar. So the C dollar is stronger than the P dollar. The exchange rate is presently P dollars 3 equals 1 C dollar. So this indicates that C dollar is stronger than the P dollar because in order to purchase 1 C dollar, we have to pay 3 P dollars. I'm interested in your opinion on these matters. The first requirement is to recommend with reasons how we should finance the initial escrow setup and integration costs of $300 million and the annual escrow management fee of $200 million. All right. So as per our answering technique, which we have highlighted in webinar number 3, what should be your first step after reading through the scenario? You are supposed to reiterate the requirement in your own words, in a concise manner, before you proceed to develop the answer plan. Okay, so if you are clueless about what I'm talking about, please watch the recorded version of the third webinar, which can be accessed via our student dashboard, because it's of utmost importance that you know how to develop answers, how to manage your time. You need to stick to our answering and time management technique. You need to keep practicing the answering and time management techniques, which we have highlighted via webinar number 3, to stand a chance to successfully implement the same techniques, thereby manage your time appropriately. At the same time, come up with well-structured answers at your real examination. So if you missed out on the third webinar, please go watch the recorded version, which is accessible via our student dashboard. So your first step is to reiterate the requirement in your own words in a concise manner. So task number 3, how to finance IS investments. So this is an investment to do with information systems. So how are we supposed to finance our IS investments? So recommend with reasons how we should finance the initial escrow setup integration cost of $300 million and the annual escrow management fee of $200 million. I've simplified it as how to finance IS investments. All right, so based on the weightage provided, which is 50%, 25 marks are allocated for this subtask. So in order to gain 25 marks, since each valid point carries 2 to 3 marks, you need to come up with something like 9 to 12 points within your answer. 9 to 12 points within your answer. All right, so let's look at how you should structure your answer. So I've come up with a main heading which goes as funding options, which is in bold and underlined format. Then we are thinking about two different types of funding which we need to be concerned about. So for each funding option, I've for each funding element, I've come up with a subheading which is in bold format. So it reads as escrow setup and integration, as well as annual escrow management fee. Okay, so let's look at what you need to do when it comes to structuring your answer. So first things first, we need to understand how much this total investment is in P dollar terms, because as per what's highlighted within this scenario, the quotation is provided in C dollar terms because we escrow, this escrow services provider is located within a country called Sealand. However, we are operating within Poland. Our financial statements are developed using P dollars. So because of that, we need to understand how much this is going to cost us in our home currency. So C dollars 500 million equates to P dollars 1.5 billion or 1,500 million. How did I arrive at this figure? Because as per what's highlighted in here, the exchange rate is 3 P dollars equals 1 C dollar. So 500 million C dollars into 3 becomes 1.5 billion P dollars. So this is a significant investment for us in P dollar terms. So first things first, directing your attention towards escrow setup and integration. The investment in C dollar terms is $300 million. So the investment tied to initial escrow setup and integration is $300 million. And we need to understand how much it is in P dollar terms. 300 million into 3 becomes P dollars 900 million. So when raising this amount of money, this is a one-off investment which is intended for the setup and integration of the escrow arrangement. We need not make these payments on an annual basis. Instead, we have to do this payment on a one-off basis. So when dealing with this payment, since this indicates a long-term investment, we need to consider long-term funding options. So what are the long-term funding options at our disposal? We can opt for a long-term loan, or we can opt for equity, or we can utilize our equity. When talking about equity, you can raise money by selling shares to the public, thereby raising equity financing by selling shares. On the other hand, we can utilize the money which appears within our reserves. So these two options are at our disposal if we opt for equity, and if we opt for a loan, it's just a matter of reaching a bank and trying to fulfill our funding needs via a bank loan. So we are dealing with a long-term funding option, and whenever your knowledge pertinent to long-term funding is tested, always remember we can opt for debt financing, thereby going for a long-term loan, or we can opt for equity financing. All right, so under debt financing, we are trying to raise a loan. So when raising loan finance, you need to think about three main elements. Number one, how it impacts our gearing ratio. Number two, what we need to do to secure this loan. Number three, our non-current liabilities versus property, plant, and equipment. You need to focus your attention towards these three elements whenever you are developing an answer to do with raising loan financing. So what are these three elements? Number one, how it impacts our gearing, how this loan impacts our gearing. Number two, how to secure the loan, what we should do to secure this loan. And number three, our non-current liabilities against our property, plant, and equipment. Okay, so first things first, looking at how this loan impacts our gearing, you need to think about our pre-investment gearing. So as per what appears within your pre-scene, our pre-investment gearing is 50.9, or you can round it off to the nearest number as 51%. So before this investment, before us trying to raise this amount of money, our gearing ratio is 51%, which is already above the healthy gearing rate, because as per what we have learned under your F3 syllabus, any company's gearing, it's best that any company's gearing is at 50% or lesser than 50%. However, our gearing rate is above 50%, our pre-investment gearing. And if we go for this investment and if we try to raise 900 million P dollars, our post-investment gearing goes up to 55%. So when talking about the post-investment gearing, you need to rework the gearing calculation considering the information presented within this scenario. So if we are opting for debt when trying to raise P dollars 900 million, then our debt figure will increase. When our debt increases, so would our gearing ratio. So I've worked out the fresh gearing ratio considering the 900 million investment which we are opting for. So once I've done the numbers, I've arrived at a fresh gearing ratio or a post-investment gearing ratio, which is 55%. So at your exam, always remember, mention the pre-investment gearing and then rework the gearing ratio and mention the post-investment gearing as well. So the gearing ratio is above 50%, which indicates that we are a risky business in the eyes of lenders. Why would the lender see us as a risky business? Because it indicates our gearing ratio, especially our post-investment gearing ratio, indicates the fact that there's too much debt within our organization. So whenever a company is exposed to too much debt, it might face bankruptcy in the future. So no lender will like to face a situation where they end up lending money to us, but since we face bankruptcy, they cannot recover monies due, which is going to be a loss for any bank out there. So in order to make sure that they manage their financial risks, they will try to make sure that they are lending to a business which is financially stable. So when you look at our post-investment gearing, it indicates that we are a risky business. Our loans are too much compared to our total capital. So Rotomyne is seen as a risky business in the eyes of the lenders. And because of that, since even if a lender wants to lend money to us, they will try to recover the risk which they are exposed to by lending to us. So with the intention of recovering their risks, what would they do? They will end up charging high interest rates from us. When they charge high interest rates, it's going to increase our costs, because interest rates are denoted in finance costs within our statement of profit and loss. So when lenders are charging high interest from us, then our finance costs will increase. When finance costs increases, our profitability will decrease. So lenders will charge high interest rates, which will increase finance costs for our company. All right, so that's what our gearing ratio tells us. Then you need to think about what we need to do to secure this loan, which amounts to P dollars 900 million. It might be difficult for us to secure this loan, especially given the fact that this amount is huge in P dollar terms. And on top of that, we need to consider the nature of assets which we are trying to acquire utilizing this funding. So as per what's highlighted within this scenario, we are trying to go for an escrow arrangement, which is an intangible asset. So we are trying to invest this money on an intangible asset like escrow services. And in the eyes of finance providers, they cannot accurately appraise and liquidate intangible assets. So if we do not end up paying, what can the finance providers do? Can they try and liquidate the escrow setup? They cannot. All right. So these costs tied to escrow setup and integration, it's everything to do with a software which we are trying to purchase. So this is an intangible asset of the company. So if we do not pay finance providers, they cannot liquidate this software and make money out of it. So if you're going for some type of a construction, and when we are going for this construction, if we opt for a loan, even if we don't pay the monies due, the bank can recover their dues by auctioning off our building or auctioning off a factory which we have built. However, when getting access to intangible assets, if we don't pay, the finance providers can't take any action to liquidate these type of intangible assets easily. So these type of assets, if we keep it as collateral, it will be viewed as bad collateral in the eyes of finance providers. So finance providers won't like too much to gain access to bad collateral when they are extending a huge loan, especially when our gearing is above the standard rate, which is 50%. And looking at the setup costs, has or carries no resale value, again, which indicates that bankers are gaining access to bad collateral. So it might not be easy for us to secure this loan, given the fact that bankers are getting access to bad collateral. And on top of that, our gearing ratio is above the generally acceptable rate of 50%. And then you need to understand our financial standing against, thereby trying to understand the non-current liabilities against the property, plant, and equipment. Looking at the current non-current liabilities of Rotomyne, you can see that it's the current non-current liabilities is lower than the property, plant, and equipment figure. So if you look at your financial statements, you'd understand what I'm talking about. Our non-current liabilities come up to $5 billion, and our property, plant, and equipment comes up to somewhere around $7.7 billion, which indicates that our property, plant, and equipment figure is higher than our non-current liabilities. So if bankers say that they cannot hold intangible assets as collateral, they cannot hold this escrow arrangement or this software as collateral, then we can always convince them by saying the fact that we have property, plant, and equipment which is higher than our existing non-current liabilities. Our non-current liabilities is just $5 billion, whereas our property, plant, and equipment comes up to $7.7 billion, which indicates that we can keep our existing property, plant, and equipment as security against this loan. So our non-current liabilities is lower than our property, plant, and equipment figure, and we can secure additional debt against our existing assets. And we should make sure that we mention this point when negotiating with finance providers. However, when opting for this loan, we should avoid breaching debt covenants or gearing standards, considering our existing loans, which amount to $5 billion. So when opting for this loan, we need to understand whether we are breaching any debt covenants, because if we are poised to breach any debt covenants, if we opt for this loan, then we cannot go ahead with this loan. We cannot fund this investment via loan financing, because if we are facing a situation where our existing debt covenants will be breached due to this loan, then we have to get in touch with our creditors and get their approval to amend these debt covenants if possible. If not, we cannot opt for loan financing to fund this initiative. So these are the three elements which you need to focus on if you're opting for loan financing. Then the other option at our disposal is to go for equity financing. And under equity financing, as I mentioned earlier, any company has two options at their disposal. One is to go for a share issue, and the other is to utilize their retained earnings or what appears within their reserves. So if we opt for a rights issue, so when it comes to selling shares to the public, rather than selling fresh shares to the public or additional shares to the public, it makes our life easier when we opt for a rights issue. So what is a rights issue? It's a situation where we raise money by selling shares at a discount to our existing shareholders. So it makes our life easy when it comes to raising the necessary finance when we are dealing with existing shareholders, rather than trying to convince shareholders who have not invested on us as yet. So it is easy. Our marketing costs tied to the share issue will be extremely less when going for rights issue, when dealing with our existing shareholders, rather than trying to deal with shareholders or potential shareholders or individuals who have not invested on our stock as yet. So it's better to opt for rights issue when raising equity financing. This is a situation where we raise money by selling shares at a discount to existing shareholders. And if we opt for this option, our gearing ratio will decrease, which is good for us because our pre-investment gearing is 51%, which is already high. So when going for this investment, if we go for equity financing, then our gearing ratio will decrease and it will go below 50%. However, the success of a rights issue depends on how we convince our shareholders, because if we do not communicate appropriately with our existing shareholders will not take up their rights. If they do not take up their rights, the share issue will be undersubscribed. So if it's undersubscribed, we are not raising the amount necessary for us to go for this escrow arrangement fee. Okay, so we have to make sure that we convince our shareholders, and with the intention of convincing our shareholders, we have to communicate with them. So looking at escrow services, as per what's highlighted within this scenario, escrow services significantly enhance the credibility of the licensing agreements, because if we go for this escrow arrangement, then we are in a position to share our proprietary knowledge with other players within the industry. By doing so under a licensing agreement, we will be exposed to additional cash flows in the future. We are exposed to positive NPVs in the future. This will lead to increased long-term value and positive NPVs. So whenever, due to a certain project carried out by our company, whenever we are exposed to additional cash flows, positive NPVs, and increased long-term value for the business, then it's easy for us to convince our shareholders. So we can easily go for equity funding because given this escrow service, we are in a position to reap the most benefits by sharing our proprietary knowledge, at the same time safeguarding our intellectual property. On the other hand, we can utilize our retained earnings as well. So as per what appears within your financial statements, our retained earnings come up to $2.25 billion in P dollar terms. So this indicates that we have enough retained earnings at our disposal. So rather than opting for a loan, rather than opting for a share issue, we can easily utilize the retained earnings to fund this initiative, because as per the numbers, this initiative will need just $900 million, whereas whereas our retained earnings come up to $2.2 billion. So we just need $900 million. We have 2,252 million or $2.2 billion at our disposal. So we can use this money and go ahead with this escrow setup. And if we utilize retained earnings, it will not impact our gearing, and it won't dilute shareholders' equity as well, because if you opt for rights issue, it will dilute shareholders' funds or shareholders' equity. But if you use retained earnings, there won't be a dilution as such, and we need not convince shareholders or lenders as well, because as I mentioned earlier, it seems that it's not too easy to convince our lenders. And on top of that, if we try to convince our shareholders, if we are opting for rights issue, then we have to spend some money to market the rights issue. We can save all this money, as well as the efforts put into negotiating with banks, if we opt for a situation where we utilize our retained earnings. All right, so these are the options at our disposal. So we can raise the 900. In order to raise the 900 million P dollars, we can opt for a loan, we can opt for a rights issue, or we can utilize our retained earnings. So these elements should be covered within your answer if your knowledge pertaining to long-term funding is tested. Then how are we supposed to deal with our escrow management fee? Okay, so there is an indication about the escrow management fee in annual terms. Each year, in order to maintain this escrow arrangement, to make sure that this escrow arrangement works without hiccups, we have to spend 200 million C dollars. Okay, so this is an annual figure. So how are we supposed to raise the necessary money to make these annual payments? So I've come up with a subheading which goes as annual escrow management fee, which is in bold format. So this investment in C dollar terms is $200 million. However, we need to consider this investment in P dollar terms. So 200 million into 3, based on the exchange rate, comes up to 600 million dollars. And this is a recurring expense. Every year, we have to spend $600 million if we are to utilize this escrow setup, this escrow arrangement without any hiccups. So when dealing with a recurring expense, we are supposed to utilize our working capital to fund the initiative, or else we can opt for a short-term loan. So it is incorrect to say that we have to opt for debt or equity to fund a recurring expense. That is incorrect, because whenever we are in need of money to fund a long-term investment, we have to go for long-term funding. Whenever we are in need of money to fund a recurring expense, then we have to go for short-term financing or short-term funding options. So I've already covered long-term funding options. I've already mentioned what to do when dealing with the escrow setup and integration investments. But when looking at this annual recurring expense, which is the annual escrow management fee, we have to utilize our working capital, or we have to opt for a short-term loan. So we can finance this investment via working capital, which will carry no impact on our gearing ratio. And looking at, so if we are opting for working capital, if you're trying to fund this amount of money or find this amount of money utilizing our working capital, you have to look at the net current assets of the company. So when you look at the net current assets, it only comes up to $404 million. However, this investment comes up to $600 million. So our net current assets, which is current assets minus current liabilities, it comes up to just $404 million, which indicates that we don't have enough working capital to fund this initiative. So we can't go for working capital. Instead, we have to opt for a short-term loan. If we opt for a short-term loan, this is a loan which is repaid within 12 months. So again, this carries no impact on our gearing, and we can easily negotiate with our finance providers by presenting cash flow forecasts tied to this escrow arrangement, because we are spending this amount of money to make sure that we stand a chance to share our proprietary knowledge via an escrow arrangement, which will safeguard our intellectual property. And on top of that, by sharing our knowledge, we will be exposed to profits in the future. We will be exposed to additional cash flows in the future. So we can show these cash flow forecasts. We can share information pertinent to NPVs tied to us going ahead with these licensing agreements when trying to negotiate with our finance providers. Because if finance providers can easily see that we are going to be exposed to positive NPVs in the future, if our cash flows are going to increase in a positive manner in the future, then they need not think twice about extending funds for a short-term loan. And on top of that, we can also talk about our interest cover, which is 5:1, as per what appears within your financial statements. What does it indicate? This indicates the fact that we are generating 5 times the operating profit with respect to or against our finance costs. So if our finance costs or loan interests come up to $1 million, we are generating 5 million operating profits. So this indicates that we can easily repay our loan interests. We can easily pay our finance costs, which will satisfy the lenders. So when opting for the short-term loan, we need to show them cash flow forecasts. We need to show them the NPVs tied to the licensing agreement. And on top of that, we have to, when negotiating with them, we have to always remind them that our interest cover is 5:1, which indicates that we are generating enough operating profits, which enables us to cover our finance costs. All right, so that's how we are supposed to look at this annual escrow management fee. I've suggested that we can go for working capital. However, we don't have enough net current assets. So because of that, the only option at our disposal is to go for a short-term loan. So when going for a short-term loan, I've also highlighted how you should negotiate terms. So what type of information should be shared with lenders when carrying out the negotiation. All right, so I hope you gained a good understanding of how to deal with a question to do with long-term funding as well as short-term funding. So if you opt for long-term funding, you can go for debt or equity. And if you opt for short-term funding, you have two options at your disposal. You can utilize your working capital or opt for a short-term loan. So in a nutshell, when developing the answer, I have considered what appears within your F3 syllabus tied to financing options. And I've also considered what you need to do when it comes to demonstrating credit worthiness to lenders. And I've also highlighted how to handle a rights issue. And I've also mentioned about debt covenants. So all these elements are covered within your syllabus. So when covering these elements, I did not just replicate theoretical elements or theoretical concepts. Instead, I solely focus my attention towards utilizing the information presented in the scenario. So based on the information presented, I developed my arguments. When developing my arguments, I backed up each of my argument with justifications. When bringing in justifications, I brought in theoretical elements. So that's exactly how we are supposed to tackle things or handle affairs at your real examination. When developing your answers, it's not a matter of parroting theoretical concepts or theoretical elements. When going through your answer scripts, I identified that some of you has resorted to simply explain theoretical elements. Always remember, you are playing the role of a senior finance manager who is reporting to board members. So when reporting to board members, your job is not to reiterate theories, because your board members are not interested to learn theories. Instead, they are looking for solutions to the issues at hand. So when providing solutions, you have to consider the information presented in the scenario, and with the intention of providing justified recommendations, you need to bring in your theoretical knowledge. And on top of that, when marking your papers, I understood that some of you had brought in irrelevant information, or you have brought in information from the pre-scene unnecessarily. This should be avoided as well, because when developing your answers, you need to solely rely on the information presented within your scenario. So when developing the answer, that's exactly what I did. I only considered the information which was presented in the scenario. And when providing my justification, so when bringing in arguments and providing justified arguments, I brought in relevant information from the pre-scene. I have not mentioned the fact that we are conducting our mining operations in a traditional manner. I've not mentioned about us dealing with an EV manufacturer, which constitutes to 22% of or contributes to 22% of our revenues. All these things are irrelevant to this scenario. I've only brought in information pertaining to our interest cover, our gearing ratio, our net current assets, our property, plant, and equipment against non-current liabilities, which is totally relevant to the scenario at hand. And covering, although within this mock itself, I've covered all these four elements. In our remaining mock exams, I've covered all these elements in different subtasks, because when it comes to debt covenants and demonstrating credit worthiness, I've not come up with in-depth answers, because that's not the prime concern of this requirement. But I've developed separate questions which tests your knowledge in depth pertaining to what you need to get right when demonstrating credit worthiness to lenders, as well as how to deal with debt covenants. Because if you look at this second task, subtask, the covenants on our existing loans forbid us to exceed a gearing of 52%. The board does not intend to issue shares at present as well. Recommend with reasons how we should deal with the breach of our debt covenants if we borrow $300 million. So this is a question which primarily tests your understanding about debt covenants. So likewise, I've covered all these elements within the mock exam. So that's exactly why you need to attempt the mocks under exam conditions. After attempting the mocks, watch the master classes, just like how I've explained the answer via the master classes. I've explained each answer pertaining to our mock exams. And once you have learned your theory, since you have learned your theory pertaining to long-term and short-term funding options, since you have improved your application skills, your next step should be to redevelop answers, thereby testing your knowledge to see whether you have gained something by watching the master classes. So stick to this process, keep fighting, because in these upcoming weeks, if you attempt all 6 mock exams and conduct your revision by redeveloping answer plans, if you watch all the master classes, you can pass for sure. That is what our students achieved in our previous SCS session. We achieved a 97% pass rate, and those who stuck to our study plan, be it our 8-week study plan or the 3-week study plan, they ended up passing the SCS exam comfortably. When the pass mark was just 80, most of our students got more than 100 marks simply by sticking to our study plan. And if you are yet to start your preparations focused on the exams happening in November, you still have time. If you need help, get in touch with me via WhatsApp. I will share, tailored study plans with you to make sure that you stand a chance of passing the SCS exam comfortably. Because if you utilize our resources and stick to the study plans, then you can definitely pass your SCS exam. All right. So having said that, it brings us to the Q&A session. I'm going to pause the recording and I'm going to address all your concerns. All right, folks. So thank you very much for those questions. I hope I addressed everything. So if you want to contact us, you can do it via our website, which is www.study@tcs.com, or you can email us at info@study@tcs.com. If you want to get in touch with us, go to our website and click on the contact button and drop your message. Our admin staff will get in touch with you. Then if you want any assistance, you can direct message me via this WhatsApp number. And I invite you to follow us on our social media handles, especially YouTube and TikTok, because via YouTube, you'd gain access to the recorded versions of the weekly webinars and workshops, which we have handled so far. And via the TikTok handle, you'd gain access to a set of mind maps, a set of videos, which is a good mind map of the entire pre-scene. So on your way to office in the upcoming days, keep watching these set of TikTok videos to constantly remind yourself about what appears within your pre-scene document. All right, so having said that, it brings us to the end of the second workshop. I hope you gained something out of this, and I expect to see you at the third workshop, in which I'm going to take you through your P3 syllabus, and based on the P3 syllabus, I will be taking you through a question, an exam standard and pre-scene relevant mock question covering one of the P3 elements. So thank you very much for joining. I expect to see you guys next Sunday at the same time. See you and take care.